Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for May 24th, 2022. Well, yesterday we had a pretty nice relief rally, at least in the Dow. We saw a sustained and controlled rally to the upside in the Dow, but unfortunately, it seemed as if the SPY, the QQQ, and IWM struggled to maintain that bullish momentum. So what does that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Tuesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I do truly appreciate it. You know, yesterday left us with probably a little more questions than answers as we I almost feel like the bulls missed their opportunity to really do some repair of the technicals yesterday in a relief rally. The Dow itself did a pretty good job rallying up pretty strongly, pushing up here maybe to challenge a little tiny bit of price resistance in the chart, but didn't have any help really from the SPY and the QQQ. So let's take a look at this. If those bulls can continue to follow through, remember we've got these resistance levels up here in the chart that we're going to have to be watching pretty closely, in that downtrend that we'll have to watch carefully. If those bears were to take back over and push back down, you can see we didn't really create any kind of major barrier for those bears to push down through. So let's watch this area right in here. If we were to break down, I think below yesterday's candle, the low of yesterday's candle, that could really inspire those bears to push pretty hard. And there may be some reason for concern on that this morning. So we'll take a look here in just a second. Our technicals here really had no major improvement yesterday. It was nice that we rallied up. Didn't make it up to that 500-day moving average, and there just seemed to be a lack of enthusiasm by those bulls in the other indexes. Let's take a look at those. In the SPY, we did rally up, but it just wasn't really enough to provide any real change here in those charts. Pushing up here, not quite making it back up here to the downtrend line. And we're starting to see just a little bit of uncertainty this morning. Asian markets were lower overnight. European markets are lower this morning. And U.S. futures are taking back a big portion of yesterday's gain at the open. But they are trying to bounce, at least right now, off of the overnight lows. So keep an eye on that. Pushing back up here toward that chart, we'll want to be watching this accumulation of price action in here where we get so many touches to this line in this chart. So there's a level right in here that we're going to need to show some confidence to break through. If we cannot break through that, I want you to notice really carefully that there's not a whole lot in here. If we were to push down below yesterday's candle, we could easily be dropping through some support in the chart. And that's the unfortunate thing about yesterday. We just didn't get enough of that momentum to push us back higher, which kind of leaves an open door for those bears. And our technicals certainly didn't make any major improvement yesterday. We still didn't make it up there to that 50-day or 500-day moving average. With those shorter term averages moving down closer in here, we're creating that substantial resistance area right in here on the chart, not giving ourselves a whole lot of upside opportunity. If we take a look at our QQQ really struggled yesterday. As a matter of fact, if it wasn't for the push right at the end of the day, we wouldn't have even been able to take out the high of Friday's open. So we just barely squeaked by here with some bullishness in the chart. Good news is we're still holding on to a little bit of price support, but we have yet to challenge any resistance levels above. And unfortunately, with the data coming our way this week, we may continue to struggle with that. Now, keep in mind, we could just continue to drift along here sideways if we can find enough bullish energy to hold in here to make that decision where we're going to pop that downtrend or not. but unfortunately we just really don't have a whole lot of support in here. If those bears were to find reason to attack, that could be, well, just pretty darn ugly. And if we take a look at our technicals here on the chart, they're pretty darn dismal. Notice our 50 is just about ready to cross down through that 500-day moving average, and our shorter term moving averages really building a level of resistance in here that could be substantial for us to push back through. If we take a look at our Russell is also struggled yesterday trying to push through, and you can see at the close it didn't even close above the high of the Friday morning pop. So pretty dismal results here on IWM, and we're really pushing into that situation where we could see a substantial failure here in that chart. This is setting up as a potential short, I think, and we'll want to watch this level right here. If those bears find reason to push, that could be ugly. Again, if those bulls can find some good inspiration here, then we might have that opportunity to pop out. It's just not looking good, and when we look at the technicals, certainly not looking good there as well, with that 50 already well below our 500-day moving average, and excuse me, our short-term technicals really pushing down here to provide quite a little bit of resistance. If we take a look at our VIX yesterday, our VIX did pull back, but I gotta tell you, it wasn't enough to really be inspirational here, I think, for the market. If we notice in here, we're still running in an upside trend, and we're still holding support levels here around that 25-26 handle. The push down yesterday with that bullish move in the Dow really not supported well by the SPY Q and IWM. As you can see, as we didn't even break the low of that Friday morning gap up open. So watch that carefully. We still have that potential that we could ease this a little bit more down here into that trend or into that 25 area support area in the chart. But if those bears find a reason to defend in here, and there may be some reason for that coming up in the economic data, if we were to pop off of here and start moving back up, really watch this carefully. Things could change dramatically if we pop that VIX above there, if fear really starts coming back in. If we take a look at our T2122, now T2122 gives us that best hope that we may still have some relief rally in it. But you can see how far we moved yesterday, and that's with that lackluster SPY and QQQ. So if we can find reason for bullishness, we certainly have some upside opportunity where we can rally, but we also want to keep in mind that we've opened up a pretty sizable downside move in T2122 if those bears find reason for inspiration. And if we take a look at our T2108, you know, unfortunately, with that rally yesterday, it just wasn't broad-based enough, and you can see across here we didn't break into that resistance in T2108. 19% of the stocks holding above their 40-day moving average. Now, that's a very bearish look on the market, so you could say it's so bearish that that should give us a reason for bullishness, but we're not even challenging these downtrends or resistance levels in the chart. So be kind of careful here if that tide reverses. And if we take a look at T2107, very much the same thing. We rallied, we did hold a little higher low, but we didn't challenge resistance. We didn't overcome downtrends in any way, shape, or form. And only 22.5% of the stocks holding above their 200-day. That's not a bullish case to be made there in that chart. Taking a look at our T2101, you can see that we did get that pullback yesterday with that sustained rally in the Dow, but it didn't really break down through these price support areas in that chart. So if those bears were to come back in, watch for that to potentially spike back up. We've got this little upside trend to be watching here as well. So T2101 not giving us the best of data here, and one of the reasons once again is if we look at our Dow, relatively light volume on that rally yesterday. And if we take a look at the SPY, light, QQQ, light volume, and IWM, light volume as well. So we just didn't get that momentum that I was really kind of hoping that we would see to relieve that pressure nicely and actually set up some really good short trades, but just couldn't get that much going yesterday. So let's take a look at our economic calendar for today. And the things that I've been talking about here are what we're going to have to deal with this morning. First off, we've got PMI flash composite coming in. Now the PMI is expected to come in around 55. That's not exactly bullish or overly bullish in there. It's not terrible, but it's not exactly bullish, and I don't know that it's going to provide us with a whole lot of levity here in the market. Now, keeping in mind, if it happens to miss, that could be a major problem for us. And then we've got new home sales, and new home sales consensus is expecting them to decline, and I think they may have put that consensus even a little bit higher than they should have, and that possibility that we could miss on that number substantially. So watch those numbers closely. These could set the stage for the day, whether or not we're going to continue to show that bearishness in the market, or if we can kind of get a little bit of a lift if they come in better than expected. Now, notice that we've added in here a Jerome Powell conversation day. We've got him out there speaking again, so that's going to keep us on our toes. A 2-year note auction to also make note of. And then keep in mind, as you're planning forward into Wednesday, boy, we've got a tough one on Wednesday with those durable goods numbers after the mortgage application numbers. We've got petroleum status, and then we're going to have that FOMC minutes coming out, which always, kind of keeps markets guessing on that. So watch that closely as we move forward through the day. You might want to be really careful into not over trading into tomorrow morning, because that durable goods order comes out, that report comes out before the open. If we take a look at our earnings calendar today, we continue along this major theme of retail. If you guys saw Snap let everyone know that they're going to miss their own targets here in Snap, and you can see a major decline here this morning. However, we did get that bullishness with Zoom Mobile just eking out just above its earnings expectations here in the chart, popping up a little bit here this morning. We'll see if that can maintain after their conference call wasn't all that bullish. After 5 quarters of losing, trying to just kind of squeak out an earnings beat here may not be enough to lift that up. So watch that one this morning. If we take a look at that earnings calendar, we've got about 50 companies listed on the calendar, but honestly only about 20 of those have any are confirmed here. And if we take a look, we're going to hear from Best Buy this morning. It looks like Best Buy is trying to pop up here this morning on its news. We're going to hear from Abercrombie. Looks like Abercrombie is going to the south here this morning after its report. We're going to hear from Toll Brothers. That'll be an interesting one this afternoon. We're also going to hear from Nordstrom's here today, so keep an eye on Nordstrom's. Urban Outfitters will be reporting today. You'll want to keep an eye on that. And after the bell, probably our biggest tech report to be keeping on your mind is Intuit will be reporting after the bell today. So watch that closely. We're also going to hear from Ralph Lauren and a couple other of those retail reports, so watch those closely. Retail's been pretty rough here for us this season so far. Let's take a look at some stocks that could be setting up, but before we do that, guys, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful and helpful, if you could please click that thumbs up button, leave a brief comment, and then also click that share button and share it out there on your social media feed. It helps more folks find the channel. If you find the information useful, they might as well, and kind of paying it forward. Thank you so much for everyone who does take the time to do that, and I do take that seriously. I understand it is a commitment, and answering those every single day can kind of be a bit of a bore, but I certainly appreciate you guys supporting the effort of putting these videos out every day. Thank you so much. And if you want to help out the channel a little bit, you can also support the channel through the Buy Me a Coffee link that's right below the title of the video. Let's take a look at some of these stocks that have some interest maybe setting up, but we're going to have to be really careful here on these charts, because we're showing some bearishness here this morning, and may start pushing back down. So please keep in mind, we had pretty good rallies here on Microsoft. One of the things that we continue to struggle on here is tech. As we rally back into these resistance levels here in tech, watch for that opportunity of that potential failure here and maybe some short trading. We saw AMD trying to get something going yesterday, and I've been mentioning how they've been kind of hyping this in reports over and over and over. We did make this little W bottom pattern, but unfortunately breaking through that resistance, we could not hold it. So pushing back in here to support, I think this sets up potentially upside or downside. We could easily go both ways on this trade, so watch that carefully. I had mentioned ROKU yesterday, starting to show that little bit of bullishness in here on that chart, but unfortunately, and I even placed a price alert on that chart to see if that would pop on up. Nope, she reversed and went the other direction, and now we're looking like we're heading back lower here on ROKU. So not quite ready for prime time here. So this actually may be setting up short. This is what I would call a pop out of the box short. Nice little consolidating move out here toward trend, and then we fail right on back down. So watch that carefully. We had a really good rally in financials yesterday. Remember, Warren Buffett has picked up a big position in Citibank, and then JP Morgan came out yesterday with their little dog and pony show suggesting that they're doing great, everything is great, we're going to make tons of money, great. I don't know if that's the case, but let's watch that closely as we challenge this price resistance in the chart. It is entirely possible this pop up here in JP Morgan could set up a potential short trade, but if we can hold this downtrend here as support, if we can get up here and prove to hold, then we really could set up a little bit of upside opportunity in that chart. But remember, we need the proof of the hold. Without that, we just have a potential short trade where we could fail at price resistance. So keep that in mind. You could also look at that. Citibank trying to follow JP Morgan here with a nice upside pop. Once again, lots of price resistance in that chart. So don't buy at price resistance, buy at price support. Let's watch and see if we can find a little resting consolidation in here for that next opportunity in Citibank. Don't chase those big popping candles in a downtrending market, because you can find yourself buying directly at resistance. It was one of my major mistakes as a trader early on. I would chase those big white candles. I would buy too often right at price resistance. And I'll tell you guys, I struggled with this for years. This was difficult for me, and it was a hard habit to break, to stop that chasing of the big white candle. So watch that carefully in here. We want to buy at or near price support, and that's proving that we can hold this downtrend. So look for that resting pullback or even a slight consolidation over here for that opportunity for an entry. Do not chase those moves out of those big pops. And let's take a look at a few other charts that kind of interesting. We saw that big rejection in some of these consumer defensive stocks yesterday, but or not yesterday, last week, but they're really rallying back pretty strongly. Now, these are not ready for prime time here. They wouldn't be ready for a buy for me in this move. This rally back to price resistance sets up that possibility of a short. If we can get back up through here and hold, or if we can consolidate along here and then see those bulls push through, that's that recovery mode that I would look at, where we may be resuming that uptrend. Certainly volatility can create this, but these are the kind of products we're probably going to need even in a bearish or stagflation type market. We're going to need these companies as folks kind of go back to those normal staples. So watch that closely. Another thing that I thought was pretty interesting yesterday is we continued to see oil and natural gas moving substantially higher. So keep an eye on some of these stocks. Devon Energy looks like it is setting up with that nice little rest out here to trend. Watch that opportunity for an upside move. We saw ExxonMobil stretching on out yesterday, breaking out. We saw Halliburton moving back up, trying to challenge some resistance in the chart. CVX moving up. ConocoPhillips. Oil did very, very well yesterday, pushing through resistance levels in some of these charts as those bulls continue to push in here. And the reason I bring this up is, even though the Fed is raising those interest rates to try and slow the economy, what we're actually seeing is the major metrics that they calculate inflation on, and that's rent, food, and energy. They continue to go up. So as we continue to see these go up and the rates moving higher, we really set up that opportunity for a stagflationary environment in this summer, during the summer here. So watch that carefully. Not the best situation. And as you guys remember, I mentioned UNG as a possible setup coming here. And boy, natural gas took off hard yesterday, really popping, trying to break through some resistance. Now, I wouldn't chase this here. Maybe a little rest or pullback could give an opportunity. I've been holding this long term, and oh my goodness, it's doing so well. But as you can see, those natural gas stocks that I pointed out yesterday definitely powered through to the upside, and there may be more upside yet to come as the Russia-Ukraine thing continues. Also, take a look at commodity type stocks. DBC, this is a commodity tracking ETF. We're holding up in here. We're trying to address a major resistance to see whether or not we can pop on through on that. Certainly maintaining the overall trend here in this chart. So watch that carefully. We continue to see that commodity prices struggling in here. There is word out there that Ukrainian farmers are trying to plant their wheat and things like that, but with Russia blocking all of the ports of exit from that area, even if they can bring in a crop, it's unlikely that it gets to the rest of the world the way Russia continues to block those access points. If we take a look at DBA is an ag ETF. You can see pop and drop on the day here going on here, but ag continuing to move higher as those farm prices continue to move up, and a major driving factor is energy. So keep a close eye on that. So with that, guys, I want to wish you all a fantastic day in your trading. I want to wish you great results. Be really careful being overly long or chasing or speculating that we should be going up, that there's so much pain in the market it has to go back up. Please remember that a true bear market can last 14 to 18 months. So we may be just at the beginning of our bear. So watch that. And just try not to overtrade or over speculate that everything should start to rally. With that, everyone, have a great day. I'll see you right back here bright and early Tuesday morning, and I wish you Wednesday morning, and I wish you all the best.